By looking at the active positions, we can see that the amount of institutions that are increasing their position is higher than the amount that is decreasing their position. If we look at the share counts reflected in those positions, we can actually see that the decreased positions do show a higher share count. And if we take a quick glance at the institutions that are holding the most amount of shares of SOFI, we can see all the popular names here, right? We do see Vanguard at the top with almost 100 million shares. BlackRock has nearly 50 million shares. UBS has 14 million, Morgan Stanley has 13 million, Bank of America 11 million. The list goes on and on, really. And I think this signals the confidence that these institutions have in SOFI. Otherwise, they wouldn't be holding this significant of a position. Here is a graph which shows you the trend of institutional ownership of SOFI stock over the years. As we can see, the trend is moving up, and the amount of institutions that own SOFI counted in shares is now near all-time highs, which I think reflects the bullishness overall in the stock. Now let's look at some of the stock price action over the past years and also the past few weeks and months. Over the past 12 months, SOFI is up around 200%. In the past month alone, it has risen 36%. And in just the last week, it made a 8 to 9% gain in the stock price. It's currently trading at around $19.24. We can see right now at the date of recording in pre-market, it's trading at around $19.63. So it's knocking on the door of its all-time high near $24. I don't think this is coincidence, as SOFI has their Q2 earnings coming up later this month. They have some bullish developments going on, and also analysts are turning a little bit more bullish in their predictions, both from revenue and also earnings per share perspectives. I think the $20 level will be critical for SOFI, as probably there will be some resistance there. If there is no resistance there, there will probably be some resistance near $25, as that is around the all-time high levels. It's also a psychological level, just like $20. I think if SOFI breaks through and holds above it, we could see a more aggressive move, just like we've seen with Robinhood the past few weeks. If it gets rejected again and earnings disappoint, there is a little bit of room to fall, of course. I do think the earnings will make or break the stock for the coming months, but long term, it shouldn't be too much of a concern. I think if you buy this stock between $15 and $20, you're good to go for the coming years. In terms of valuation, SOFI is getting a little bit expensive. This is also where bulls and bears kind of diverge. It's the topic of valuation. SOFI is currently trading at around 65 to 70 forward PE ratios, and that's pretty expensive. That's not really a way to sugarcoat it. I would say most traditional financial stocks trade between 15, 20, 25 PE ratios forward looking, but fintechs are priced a little bit higher depending on how mature they are. For example, PayPal is trading at a very low forward PE because it's pretty mature, but then Robinhood, for example, is trading at a very high PE because it's expanding, it's growing fast, and it has a lot of potential. I think SOFI is in that same category, so I don't think that SOFI in that perspective is really expensive. Of course, the forward PE is high, but I think investors are willing to pay a premium for the SOFI stock, which has growth baked in for the coming years. Now let's talk a little bit about what SOFI is building, as I do believe that this is the aspect where SOFI is starting to shine more and more. Just recently, SOFI announced the launch of its self-serve international money transfer service, allowing users to send funds globally directly through their app, which is basically a direct shot at competitors like Wise and Remitly. They're also trying to move into the crypto space as they are rolling out crypto investing capabilities within their app, giving users more flexibility to manage digital assets under the same roof as their checking account, investing account, and other loan products. I think this is a unique moat aspect that SOFI has compared to the competition. They offer a lot of different products and they are their own bank essentially because they have their own official bank license. So that is another big strength from SOFI. And despite all that, Wall Street does not seem too convinced on the stock just yet, as most analysts are still rating it as a hold, an underperform, or even as a sell. Over 50% of the analysts rate SOFI in that aspect currently. The lowest target right now is just $6 per share, which would be a 70% decrease from current prices, which does not seem too realistic if you ask me. Right now, the average analyst price target for SOFI is around $14 to $15. That's still a big drop from today's prices, but I think it's a little bit more realistic. If we look at some more estimations, we can see that they are very positive for the current year, but also next year, which is 2026. We do see an earnings estimate on average, which would be 0.46, and a revenue estimate on average of almost 4 billion. I think this is very warranted because the company is expanding, it's innovating, retail is also flooding in to some extent, and institutions are showing their confidence in the stock. Still, a lot of analysts are shouting that you should sell SOFI or think that it's overvalued. So what's really going on? And this is where the lie really comes in from Wall Street. As Wall Street loves to talk down stocks, they're actually accumulating. It's a very old game and they play it with a lot of different stocks. Analysts slap conservative price targets on growth stocks, keeping retail out or spooking weak hands when prices drop, while their own firms steadily build positions. We are seeing this right now happen with SOFI. As we looked at some of the institutional ownership numbers, they are just increasing rapidly over time. There is no data to deny that. So I wouldn't believe the articles that come out about SOFI and analysts talking the stock down. I would just look at the cold hard data in terms of revenue growth, member growth, and also the increasing fundamentals, which are becoming very positive. We saw this happening with, for example, Tesla, with Nvidia, and now we see it a little bit with SOFI and many other stocks which are in growth mode. This is what I would call the disconnect between what Wall Street says and what they're actually doing behind the scenes. So later this month on July 29th, Q2 earnings for SOFI will drop, and I think this will be a catalyst for either a large move up or a large move down. The expectations right now is that revenue will end up around $802 million. Earnings per share will end around $0.06, so 6 cents, which would be flat with Q1 of 2025. Some of the bigger questions to ask yourself when looking at the earnings are looking at some core KPIs for SOFI, right? So are they adding more members like last quarter? Is fee-based revenue moving up? Things like investing, card transactions, referrals, is that continuing to grow? And how are their loan delinquencies and credit metrics holding up in this rate environment? I think if they beat on most of the KPIs and numbers and also raise guidance, SOFI will blast past $20 easily, maybe even 25 in the short term. But if growth slows or the outlook is a little bit more cautious, prices could drop down a little bit for the short term. It's something to be aware of, but I think in the long term, SOFI is still very, very bullish. So here is my take about SOFI in summary. Institutions are loading up heavily and they don't usually do this to play short-term games. They are really positioning themselves for long-term growth. The company is innovating fast and expanding into new products, launching things like crypto services, debit partnerships, and growing fee revenues. Valuation is still high, but I think it's warranted because they are in fintech and the market narrative is shifting a little bit. Beyond that, of course, we also looked at the execution and growth numbers that SOFI is putting out, and I think those are all super positive. The stock is running a little bit hot as it's near all-time highs, But again, they are showing the growth and the numbers are backing up that growth. So I don't think it's a reason to worry, and it's still a good moment to step in.